The Phoenix real estate market is officially cold. I've been talking week after week about how we've been seeing weakness in the market, and now, according to this reading, we are officially in a cold market. Today, we're also going to talk about buyer's markets because you guys had a lot of pushback from me last week that we're not in a buyer's market, but I want to talk about what I mean by that. So let's get into it. Welcome back. I hope everyone had a great Thanksgiving. So the contract ratio, this is one of the measures from the Cromford report, and it takes a look at the number of active listings on the market and how many of those active listings are actually under contract. So active listings compared to listings under contract, basically. And that ratio tells us what that heat is in the market. And it is a very real-time measure because we're seeing those homes being taken off the market and go into an under contract status. And so with the contract ratio, we see a lot of seasonality. We also see this move a little bit quicker, like I said, just because it is more real time. Now, any reading of the contract ratio that is 30 or below is considered a cold market, and we just hit 30 on the dot. Now, this isn't too surprising. Like I said, every single week I've been talking about the weakness in the market. We've been looking at the CMI, which is the Cromford Market Index. That measure is a little bit slower to move than the contract ratio, but it's no surprise that they're both in alignment, that we have moved into a weaker market. Now, you can see on the zip code map that we don't really have any warm or hot areas anymore, with the exception of this little zip code in Mesa 85203. But for the most part, everything has turned green and blue, and there is a lot of it. So any indication here, 30 to 60 is that green color, and that's a balanced warm market. So depending on what zip code you're in, there's still that balanced warm hope out there. But there is a lot of blue as well. So we're officially in a cold market when you look at the broader metro area. So you can see all those zip codes that are cold as well. What's interesting to look at is just as recent as last week, look how much more green there was than blue. You can see that change from week to week. We also had two hot zip codes because they were yellow, which was Tullison and Glendale, 85303 in Glendale and 85353 in Tullison. And those are no longer. They both have become a bit cooler, and they're now in that balanced warm market. Now, as you can see, every zip code's a little bit different. Is it the best time to be a seller overall? No, December is a slower month for us in general. There are fewer buyers out there, and listings start to pile up usually just because the demand goes down. However, it's still very possible to sell your home. So if you're wondering what the contract ratio is in your zip code, just to understand the heat in your area, check the description below. I have a link where you can request that information. Now, I want to also talk about what this means overall, right? So we say weak market, yada, yada, yada. But what that really means is once buyers start to have more of an advantage over sellers and we have more inventory on the market, everything starts to soften, so to speak, that means prices start to come down. So if this continues, we need to see a longer term trend of this, but if this does continue, we can start to see prices soften. The Cromford report is saying downward pressure on prices is starting to build as more sellers try to attract a relatively small pool of buyers. This is in response to the updated contract ratio number. So they're already saying that we're going to be seeing downward pressure on prices. This doesn't mean that we're seeing 30% price drops overnight, but we may start to see sales prices that are a little bit lower. And we won't see that, however, until probably February, because if you think about it, December is when these contracts are being negotiated. Most likely they close in January or maybe even February. So it's likely not until February that we start to see if this lower contract ratio actually put downward pressure on pricing. Sales prices are a lagging indicator, but we can at least see what's going on with that contract ratio of how much heat there is in the market. That's a more real-time measure. Now, every week we've been looking at these, at our active inventory, right? And we've seen some abnormalities in it because it started to increase earlier this year, and it's been on a really strong increase week over week. So the more inventory we get, the fewer buyers we have, again, we end up seeing a softening in the market. Eventually, we start to see prices come down. So we've been on that track. Not to mention, we are in a slower time of the year in this fall timeframe, and in particular, December that we are in now. November, December, usually slower. So inventory levels. Last week I said the Cromford report says Thanksgiving is kind of the last call for inventory rising, and then it starts to taper off. And if that doesn't happen, then we are most certainly seeing something abnormal going on. A couple weeks ago, they said they're actually worried that there's something abnormal going on. So I took a look at inventory, and we have a dip last week in inventory down to 21,636, where we peaked at 22,086. Now, is this just because it was Thanksgiving last week and people probably didn't list their house? Probably. Next week will be a much better indication of if we're seeing inventory taper off or not, because this very well could pop back up and we could start to climb again. Or we could see it start to go down. So we got to keep our eyes on this, because this is one of the more important pieces as it relates to the health of our market, especially because we've been seeing this abnormal increase here. So that is where we're at with active listings. We're going to continue to keep a close eye on that. So what is happening with the number of listings coming on the market? Like, where are all of these buyers? Well, as I said before, traditionally this time of year, there's a lot of buyers who are distracted with Christmas and all of the holidays and things that go on. But also mortgage rates haven't been the most exciting for buyers lately. So where we're at with mortgage rates today, 6.88, we're back under 7%. You can see that we had some pretty ugly increases here. And this was at the beginning of November. We've had a lot of volatility. Post-election, things have started to settle down. We're at 6.88%. What we can expect, well, it's hard to know. So Mortgage News Daily is saying we're at the lowest mortgage rates we've seen in a month. So, you know, we can cheer for that small win. They're saying things have calmed down. This doesn't mean there's been a huge correction back towards any lower levels. However, we haven't seen big like day over day changes. This was towards the end of last week. So last week was a little bit boring, and hey, I say we'll take it. Now, Mortgage News Daily is saying that we are going to get the jobs report on Friday, so that could certainly affect where mortgage rates go. They're saying any attempt to improve rates would be predicated on this incoming economic data. So we need to keep an eye on that on Friday and see if any of that will change rates. Now, as it relates to the Fed, which is a completely different thing, although they are indirectly related, the federal funds rate is not actually the mortgage interest rate. And so just because they lower the Fed funds rate does not mean mortgage rates go down. However, we like to keep track on what is going on with this. So the Fed is going to meet December 18th. We have a couple weeks until that happens. And they're saying latest inflation data ups the odds of a December Fed rate cut. In this article, they're saying that the odds of a rate cut have improved to 66% from 59% as of last week. So we're highly anticipating that the Fed is going to cut the rate. Some of that is going to be dependent, of course, on this jobs data that we get this week and any other very important economic news that we see over the next couple weeks. Now, if you don't want to be buying based on rate, there's a couple things that you can do. Look out for homes with assumable mortgages, where you can assume a lower mortgage rate, or a seller financing opportunity. Those are some more creative financing opportunities that aren't the run-of-the-mill everyday type of financing opportunities that are out there right now. And especially where sellers are a little bit more flexible and willing to make a deal, you might be able to get under contract with a seller who is open to either of those options. If you want to see some homes for sale that are seller financing or assumable mortgages, check the description below. I have a link where you can check those out. So buyer's markets. One misconception is that buyer's markets actually have nothing to do with price. Now, of course, having lower prices would be great for buyers. However, a buyer's market, the definition of that just means that the buyers have the advantage over the sellers, meaning that there are more properties for them to choose from. There's fewer buyers out there, so less competition, and the buyers can really negotiate harder, so to speak. So if we look at the history of the Cromford Market Index, which is indicative of a buyer or seller market because it's looking at demand versus supply, we can see that there are only 3 times in the last 24 years where the market has been this favorable to buyers. 2006 to 2008, we had a 3-year stretch. 2010, we only had 16 weeks in a buyer's market. 2022, we had 4 weeks in a buyer's market. And in 2024, we've had 3 weeks so far. So it is rare in the Phoenix metro area that we are actually in a buyer's market. Again, meaning that buyers have the advantage. Now, they have another slide here that I wanted to share because this is also showing that long-term history. Now, a buyer's market is defined as being under this balance line when we're talking about the Cromford Market Index. And so between 2006 to 2008, you see that the CMI was well below this balance line. Therefore, we had a buyer's market. We see a lot of peaks above the balance line, meaning seller's market. And then you have a couple times in 2010 and in 2022, and now in 2024, where we're seeing the CMI go just a little bit below balance, but we're not in any sort of buyer's market as we were back in 06 to 08. So I fully understand the importance of having lower prices, which would bring more buyers out, making it more affordable. That would be more advantageous to buyers. I totally get that. However, the definition of a buyer's market is really more so looking at the supply and the demand. And at the end of the day right now, the data between supply and demand is showing that buyers have the upper hand. Whether you like the prices or not, it just means that you have more of an advantage on the negotiating side and you have more choices out there and fewer buyers that you're competing against. So speaking of the CMI, let's find out what's going on with the CMI today. We're at 86.7, so that is indicative of a buyer's market, you guessed it, and this has continued to go down while we've seen our supply increasing almost to 90, meaning that it's only 11% below normal right now, almost 10% below normal. Demand is only about 23% below normal. So making the overall CMI 86.7, this is across the valley as a whole. Again, this is in alignment with what we're seeing with the contract ratio, showing that we are in that cold market throughout the valley. However, as we know, every zip code, every city is a little bit different. So let's look at what's going on with the CMI in the major cities of the Phoenix metro area. We have Fountain Hills has gone down by a lot over the last month. Chandler is up by 4%. However, both of those are still in a seller's market, along with Scottsdale, Phoenix, and Avondale. Cave Creek just barely in there. Then we have Glendale all the way down to Peoria in a balanced market. And then Surprise, Goodyear, Queen Creek, Maricopa, and Buckeye all in buyer's markets where their inventory is exceeding the buyer demand there. Now, what's interesting is over the last month, the overall change in the CMI is only negative 3.5%, whereas last week the monthly change was negative 4.2%. So we kind of saw a slowdown in that acceleration towards, more towards the buyer's market. So we'll see. It's kind of a hard time right now because it is the holidays. So, it's not the most normal market right now, but we'll have to see if that continues and where things go with the CMI as a whole. Now, remember, you may not like the prices, but if you are a buyer out there, you do have more of an advantage. We are officially in a buyer's market. So for all of you sellers out there, make sure to check the description below where you can find a link to request your contract ratio. And for buyers, check out those creative financing options. And I will see you guys next week on my next market update.